There's a lot of changes happening in the property market, yet it's so lucrative. And in this video, I want to share with you insights on what is changing, what's really happening, and also predictions on what's going to happen next. Now, in the current market update, there are 5 key areas that you need to be aware of. First one is interest rates. You also need to be aware of the stamp duty land tax changes and how they're affecting you as an investor. Next, you need to be aware where you have specific areas that are actually buoyant and increasing in value where other places are declining. If you can find these hotspots, you can really make your property investing a success. Fourthly, you need to be aware of the areas that are going to be increasing the most when it comes to growth. And how do you identify these? It's all about the new strategy of 2025, which is social housing. Now, if you're joining me for the first time, my name is Cam Dwivedi. I'm the founder of Premier Property Group, an investor developer over the last 35 years, and we're active right now. And one of our sister companies is Premier Property Education, where I've trained over 200,000 people over the last 10 years. So let's discuss interest rates. And so far, every prediction I made has actually come true. Now, I might get it wrong one day, but so far, every time I make a prediction, it comes true. So here's my interest rate predictions for you right now. So my view is that interest rates will be normalizing around 4% this time next year. So that's where we're going to be for the short term. In 2030, interest rates are going to be 9%. Write it down and we'll see what happens. Now, how can I say this? Well, there's something that's happening under the radar which many people aren't aware of. The whole infrastructure on how lending is working is changing. Basel 3.1 is being put in place at the end of 2025 and it will complete in 2030. Basel 3.1 is a standard that's being put in place, a regulatory framework when it comes to lending by large banks. Now, the banks right now are being told that by 2030, if you are going to lend, you need to have assets in the background. So the more they want to lend, the more assets they need, which means they've got to slow down the lending. And what is the one thing that they can turn on and off? And yes, of course, it's interest rates. Now, if they're lending less, well, what does that mean for you? What that means is that the interest rates are going to go up. And there are going to be other lenders that are not banks that are also going to follow suit because it's a competitive market. So that's why interest rates in 2030 are going to 9%. Now, that's not to be concerned about because you're right now in 2025. You have 5 years. And if you're noticing what I'm sharing here with you, inflation is also going to assist you. House price inflation will be increasing. You're buying in the right areas. You learn how to negotiate deals correctly with estate agents. You're able to hedge the market. Hope I'm making some sense, team. And you're going to look back in 2030 and say 2025 was such great opportunity and that you're glad that you took it. Now, like what I say, there's not just one, there's 5 key impacts that are happening in the current property market that you need to know about. So you have insights of what's actually happening now and how you can actually move forward. Now, I can't put this on this platform because it will just be taken down. Because what I want to share with you, many people don't want you to know. Now, the workaround is I've done a video training for you where we go into these 5 key impacts in a lot of detail. Now, you can click on this link below and grab this video training before it's gone. It is for the first 100 investors. Now's the time to do this right now. So if you scroll down, you'll see the link. Click on that link, register your space, grab the video training before it's taken down, and I'll see you on the other side so that you can be the informed investor moving forward in 2025. Now, let's go deeper. This chart is actually showing you swap rates. Now, swap rates over a 30-year period is an indicator of where interest rates are actually going to go. Because swap rates, just for clarity, is the money that banks borrow to each other at the rates they borrow to each other. And this is what this chart is actually showing. And look at the 30-year rate. It's exactly the prediction that I made. Their interest rates are going to be at around 4% in the short term. Now, what can you do when it comes to interest rates? Well, I can't give you any financial advice, but here's what we're doing. So there are actually 4 different types of interest rate scenarios that you can actually work with. First is variable rates. Now, variable rates aren't that great right now. Like I say, for the short term, they're going to be dropping. So the way we're using variable rates at Premier Property and my students are using is you can actually jump into a property that you're buying that is tired, it needs to add value, however it is mortgageable. So what we do is we'll get the finance on a variable rate. Because with number of variable rates, there aren't any early redemption charges. So you're not fixed in for the long term. Let me explain why. Because what we then do, typically 6 to 7 months later, is we refinance onto another product because we've done a refurbishment or we've done something to that property to add value. And there are so many different ways that you can add value, something we can discuss on another day. So we add value to that property, so the value of that property price has actually gone up. and then what we do is we will refinance onto another product. Now that's why we want to keep it variable, because we don't want to be tied in. And also tracker rates are very good for this, to do a similar scenario. So with tracker rates, what you find is they follow the market. So as the interest rates go up, the tracker rate will also go up. As the interest rates go down, the tracker rate will go down. Now just be aware of tracker rates, because when it comes to tracker rates, they're not necessarily following the Bank of England base rate. They may follow another benchmark that the lender is using. Another benchmark, for example, that the lenders use is something known as SONIA. Now why are you using tracker rates? Because it's the same scenario with the variable rates. You're adding value to that property, and because you're adding value, the value of that property goes up. And there are many tracker rates where we find there are no early redemption charges, which means that you're not tied in. So what do we do next? So once the value has been increased, the next thing we do is we decide to put it on a fixed rate. So you can decide to put it on a 2-year, or you can decide to put it on a 5-year. Now, where do you use 2-year fixed rates and where do you use 5-year fixed rates? Now, if you're like us, it's all about understanding your exit strategy. So what is your exit strategy is a question you want to ask yourself. So let's say, for example, after 2 years, you want to sell that property because you bought that property in the correct area, you bought it well, you understand the estate agent system, you learned about it, you've bought properties directly from vendor at a discount, you've invested in the correct areas, like I'm sharing with you, where you have your specific postcodes that are working for you, and all of this has increased the value of that property. And your exit is a sale of that property. Well, if you had a 5-year fixed rate, well, of course, you're going to be tied in, aren't you, for 5 years, and there will be an early redemption charge. So you'll be penalized, and there'll be a penalty that you need to pay to get out of that mortgage. However, if you can secure a plan over 2 years, where your exit strategy is to sell that property, well, then a 2-year fixed is going to be working for you, and you will know for 2 years exactly where you are with your monthly payments, because it's a fixed rate. Now, another reason why your exit strategy might be 2 years is because you're working with a joint venture partner with that property. So you want that clear exit from that partner, and 2 years is a good time frame to do this in. Now, how do we use 5-year rates at Premier Property? Well, like what I say, we'll buy that property, we'll add value to it, and then we're refinancing at a higher level, which means you're able to pull out much of your capital that you invested in that property in the first place. Because what I like about 5-year fixed rates is that you know exactly where you are with your monthly payments every single month. Now, 5-year fixes we see as an insurance policy, because what's going to happen to the interest rates, as we're already discussing, let's say they go down another 0.5% or 0.75%. Well, okay, you know where you are with your 5-year fixed rate. Now, what do you do when the interest rates go to 9%? Well, you're going to be very pleased that for 5 years you knew exactly where you were. Now, in fact, when I started in property investing, the interest rates were 17.5%. So 9% isn't actually that high, to be fair. And remember, because you're doing this right now, you're future-proofing your success. Because 5 years from now, even though the interest rates might have gone to 9%, remember, you've bought very well. You've recouped much of your capital that you invested in that property. On top of this, the property market cycle, which we could discuss on another day, is also going to help you, because there's always an upward trajectory. Over the last 400-500 years, you can measure it back. So all of this is also going to be helping you, and people are going to be looking back at you and saying, you was lucky because you did this in 2025. You're going to look back and say, you're so glad that you did this in 2025. Watch this video back in 5 years' time, and I really hope you've done something about it. Now, like what I say, there's not just one, there's 5 key impacts that are happening in the current property market that you need to know about, so you have insights of what's actually happening now and how you can actually move forward. Now, I can't put this on this platform because it will just be taken down, because what I want to share with you, many people don't want you to know. Now, the workaround is I've done a video training for you where we go into these 5 key impacts in a lot of detail. Now, you can click on this link below and grab this video training before it's gone. It is for the first 100 investors. Now's the time to do this right now. So if you scroll down, you'll see the link. Click on that link, register your space, grab the video training before it's taken down, and I'll see you on the other side so that you can be the informed investor moving forward in 2025. It's Cam Dwivedi helping you take your property investing to the next level.